Hello and welcome back to Dukascopy TV. I'm Ben Jones. It's Friday, so it's time for our weekly wrap-up, and joining me on the line to discuss the key events of this week is Simon Baptist from the Economist Intelligence Unit. Simon, thank you for joining me today. Firstly, I would like to begin by discussing the Bank of Japan monetary policy statement. No change again. Is this what you were expecting, and why do you think they have stayed as they are?
No change from the Bank of Japan was our expected outcome. And the Bank of Japan is undertaking really quite unprecedented expansion in the monetary base, and they've been very clear about what their objectives are, what the time frame is, and exactly what will be happening. And there was, again, unanimity in the policy committee about not making any changes to the current level of quantitative easing. The Bank of Japan probably will be successful this year in terms of in getting inflation up to its target level of 2%, but there's not a lot of evidence yet that the fundamental changes are being made to the Japanese economy that will enable growth to be sustained and for inflation to be maintained in 2015 and beyond. So in the short term, they're looking like they're having quite a lot of successes, but in the medium term, there are still big challenges for the Japanese economy.
Now, also on Wednesday, we had the UK unemployment rate down to 7.1%, getting close to that 7% level where the Bank of England may consider changing rates. What can we take from this data, and in your opinion, what do you think will happen if 7% is reached?
I think we definitely know that Mark Carney is now regretting ever saying the 7% line, because at the time when he said it, he surely believed that unemployment would be well above 7% for a long time. The UK economy does seem to have accelerated quite strongly in the latter few months of 2013, much more strongly than people were expecting, and this has given us higher growth numbers and also lower unemployment numbers. Although we don't think that even if we do hit the 7%, at the Economist Intelligence Unit, we don't expect that the Bank of England will be reducing rates anytime soon. The economy is still struggling, and while there's been a lot of fuss made over the recent quarterly growth numbers, it's worth remembering that this is after a couple of years of incredibly slow growth, particularly given how severe the downturn was in the financial crisis. Normally, recoveries from a financial crisis entail growth rates much faster than what we're seeing now. So things aren't as awful as they were, but it's certainly not time to get carried away. And the Bank of England will be well aware of that and will be keeping rates as they are for the next 6 months at least.
And finally, this week we have seen some slightly disappointing data from China. GDP is down by 0.1% and flash manufacturing PMI has dropped below 50. In your opinion, what does this mean for China and their economy?
This is part of the story for China that we see dominating its economic picture over the next 4 or 5 years, which is a gradual slowdown. They're in a fundamental transition from an economy that's being led by exports and investment to one that is more focused upon consumption. But the internal contradiction that the Chinese government is struggling with is that shift from investment to consumption will also entail lower growth rates. And so far, they've not really shown the willingness to accept the lower rates of GDP growth that are required to transition the economy. And this is why in the third quarter of last year, for example, we saw a big government stimulus, and it's just more of the same. We have more government spending, we have more investment, and we have a property boom driving GDP growth. None of that is sustainable in the longer term, and it's not consistent with the government's stated goals of rebalancing the economy. And as this rebalancing happens, over the next 5 years, we see growth slowing every year. Every year will be slower than the year before. But this is not necessarily a bad thing, because the Chinese economy does need to rebalance. It's better for China and for the world if they export less and import more and have more consumption, so that Chinese people can start consuming the fruits of their growth instead of just seeing the GDP all eaten up in big investment projects. So this slowdown is a trend that's going to continue, and we expect to see indicators like weakening PMI and slowing growth figures over the next couple of years.
Simon, thank you for talking to us today. That's all for this edition of the Weekly Wrap-Up. Tune in next week as Dukascopy TV will be covering all of the key events, so make sure you click back. But for now, goodbye.